The second section in the finance chapter is called income tax, and so we'll talk briefly about a few other types of taxes, but focus mainly on income tax, because that's the kind of the biggest profile one. First, we start talking about flat taxes here. We haven't defined yet what a flat tax is, but these property taxes and gas taxes are both examples of a flat tax, just a percentage of an amount. So a percentage of a property value, a percentage of a gasoline sale, and for a flat tax we can talk about the effective tax rate. And the effective tax rate is defined here, and we find it in these examples. Then we define different types of taxes, so a flat tax, like the property tax or gas tax, a progressive tax, which is what income tax is, and then a regressive tax, which we won't really worry about in this section. But a progressive tax, rather than just charging a certain percentage of the total amount, instead a progressive tax splits the amount that will be taxed into brackets, and each bracket is taxed at a different percentage, and the percentages go up as we go up by brackets. So we'll see in a second what that looks like for income tax. Here is a simple example where if someone earns, let's say, $89,350, we split their money into these three brackets, and these numbers are all coming from this table right here. This table tells us where the brackets are split up, and each bracket is taxed at a different rate. Notice the first, for instance, for a single taxpayer, the first $9,075 fall into the first bracket, and then everything after that, up until dollar number $36,900, fall into the second bracket. And then everything past that, up until dollar number $89,350, falls into the third bracket, and so on. So each dollar that they make falls into exactly one of these brackets, and those brackets split up their money according to this table. So once we do that, then we just take a certain percentage given by that table of the amount of money in that bracket, and then we add up all those taxed amounts to get the final tax. And that's basically how a income tax problem works. The rest of this section just goes through details and different examples, getting comfortable with this process. But that's the main process, is splitting the money into the brackets and then taking a certain taxed percentage from each one and adding up those taxed amounts. So the rest of the section deals with examples like that, and then some income tax terms as well. So we have our gross income, that's the total amount you make, and then adjustments, exemptions, and deductions, which are three categories that get cut away from the gross income to get down to the taxable income. So obviously it works in the taxpayer's advantage to have as many adjustments, exemptions, and deductions as possible, and the more that they have, the smaller their taxable income is, which means they have to pay less in taxes ultimately. So this margin note over here points out how this works. You start with the gross income, subtract off any adjustments, exemptions, or deductions to get down to the taxable income, and then do that process of splitting into brackets and taking a certain percentage of each bracket to get the initial tax owed, and then if there are any tax credits, subtract those off from that tax owed to get the final tax that you have to pay. So this process is what we go through in all the examples in this section, just getting practice doing this process. Be sure to pay attention to these adjustments, exemptions, and deductions, and make sure you keep track of what each one means. The adjustments will be listed, the exemptions won't be listed, but if you pay attention to this, it says that each taxpayer gets one exemption for themselves and one for each dependent. So once you know how many dependents they have, you know how many exemptions they have. And then deductions, each taxpayer has two options. Either you can take the standard deduction that's listed here in the tax table in the second to last row, or you can take an itemized deduction, which means you can add up all the things you can possibly deduct. And what you do is you take whichever one ends up deducting more. Whichever one of these is higher is the one that you take, because then you can deduct more, which makes your taxable income lower, which makes the tax that you owe less. So the rest of this section is just examples going through that process, a couple examples to get familiar with that. And that's the section on income tax.